Global trading has gone through turmoil since the onset of the Russia-Ukraine war. From stock markets to cryptocurrency exchanges, all have witnessed volatility and drastic swings. In the latest, the world's most popular cryptocurrency, Bitcoin, has slumped to below $20,000, reaching its lowest level since December 2020. The famous Bitcoin plunged by nearly 13% at one point on Saturday. Although it recovered at a little in later trading hours, Bitcoin has now lost more than 70% of its value compared to the peak it reached last year. It is now valued at a low of around $18,500. Cryptocurrency is a term given to digital currencies in which transactions are monitored by a decentralized system. These invisible currencies have been witnessing a slump in recent times. Ethereum, the second largest digital currency, took a similar tumble on Saturday, with a nearly 10% fall, dropping below the grim $1,000 mark. Experts suggest the crypto sector plummeted after lending company Celsius froze accounts withdrawals and transfers. The overall market of cryptocurrencies has fallen by 5% in the last 24 hours. Its value now amounts only to $853 billion, a severe drop from the $3 trillion it reached in December of last year. The fall of the market can be attributed to several factors, including rising inflation, which has prompted interest rate rises by central banks across the globe. Investors are now selling off their riskier assets like cryptocurrencies in order to prepare for the looming economic meltdown. The crypto market is not facing a meltdown alone. Its steep drop coincides with a global downturn in the trade market as traders turn more bearish amid rising recession fears. The latest, the U.S. Federal Reserve has now hinted that they might increase the interest rates once again. The federal governor issued a statement saying that another big interest rate hike in July is possible, adding that the federal government is all in on re-establishing price stability. This comment comes just on the back of the U.S. Central Bank announcing its biggest hike in nearly 30 years, raising the benchmark borrowing rate by 0.75 percentage points. Stark policy changes by central banks over the last week have caused turmoil across stock exchanges across the globe, including the interest rise by banks in the United States, the first hike by Swiss bank in 15 years, and the European Central Bank's pledge to bolster the indebted southern states. All these factors are now creating a turmoil in the markets that have been fluctuating for months now. And for more on this, joining us live from Paris is Rémi Bourgeot, who is an economist and technology expert at the French Institute for International and Strategic Affairs. Rémi, welcome to WION.
Yeah.
What does this fall of Bitcoin and Ethereum indicate? We know that the margin keeps tumbling and also recovering, but should investors be worried?
Well, those cryptocurrencies, crypto assets had really had a bubble that was fueled by the central banks, the mountains of liquidity that were unleashed, especially during the pandemic. But in reality, since the global financial crisis in 2008 in an almost uninterrupted way, so Bitcoin was created as a response to that, actually, by skeptics of the monetary system as it is. But with this global craze, it has cryptocurrencies really have become a main tool of speculation, really fueled by those massive waves of liquidity. And now with the rise in inflation throughout the globe, the logistic chaos facing the global economy, tightening monetary policy, those very speculative assets are really fallen victim to this combination of factors. And there's been a great deal of financial engineering, like in more traditional financial markets, leverage and very dubious constructs. So we really see a kind of traditional contagion from one asset to the next, And this really started with so-called stable coins. Some of them were operating without collateral, like Terra, which has collapsed, and actually even the more recent developments with some lenders or exchanges like Celsius blocking funds, blocking withdrawals. Well, this is a consequence somehow of this contagion, this huge stress in the crypto market.
Rémi, with all these factors that you've mentioned, should investors be worried?
Well, yes, there's really a combination of factors against cryptocurrencies, but those assets are not the only one concerned by those factors, by this kind of storm. The fact is, crypto is widely unregulated, and we've seen really all kinds of constructs being developed really on the back of this massive global liquidity bubble that has affected so many different types of assets, and cryptos are just one among many others. But it's unregulated. It's become really wild, and we really have those weakest constructs like some so-called stable coins that really affect the whole market. That's why we really see this kind of shock wave across all the cryptocurrencies and crypto assets.
Rémi, there's this fear around the world in investing in crypto. What do you think encourages this fear in investing in bitcoins?
Well, it has really gone too fast and too far. This obviously has been this global craze for Bitcoin, for crypto, has been encouraged by very low interest rates across the globe, and actually negative interest rates in real terms. While savers were simply looking for returns, for positive returns, if you will. And with the waves of liquidity that were released, this really encouraged savers to get involved in the crypto market, but also institutional investors. And we really had a great deal of leveraging taking place, financial engineering. So there were really those two sides to the crypto bubble: savers. Households' interest, involvement, and institutionalization of the market, with large financial institutions getting involved with more advanced financial products, and that really has gone too far. And at the same time, it's largely unregulated. As in many other bubbles across history, people didn't really question the foundations of those financial products, the anchoring in the real economy. So we really see a kind of backlash now, right, with as all these negative factors are accumulating, with the monetary tightening across the globe, rising inflation, and the way many financial assets are being battered at the moment.
Rémi, and keep it brief this time round. This is a final question to you. There are countries that are turning to crypto as a form of payment and to gain revenue. What are some of the risks involved when a country takes such a step?
Well, the main risk is really a disconnection between the currency used, or the asset used, namely the crypto at stake, and the real economy. You need to have some connection between the currency as a means of exchange and the real economy. Well, the countries who are using crypto or making it somehow official are countries which, some of them which don't really have a cryptocurrency, others which are looking for opportunities in terms of business. But obviously, with the current crypto crash and all the questioning around crypto constructs, this is really going to be very much affected. I'm not sure really lots of countries in in the near term are going to follow such steps.
We'll have to end it there. I've been talking to Rémi Bourgeot. Thank you very much for making time and for talking to WION today. WION is now available in your country. Download the app now and get all the news on the move.